Tuesday, September 1st, 2020, Maneco 64, home of alternative economics and contrarian views. So the price of gold is trading at $64 today. Yes, there was an ounce split. They split the price into grams from ounces. Are you going to go out there and buy a lot more gold and drive the price higher because they split the price into grams? And that's what I want to talk about today. Stock splits, reverse stock splits, and about Apple and Tesla and what happened yesterday. Is just another sign of a big stock market bubble. This is not the first time, of course, that this has been happening. I remember very well back in the 90s, and I got involved into the dot-com stocks. And I remember when I had some Amazon stocks and they did a stock split, the thing doubled and it was crazy. But it doesn't mean anything. The company's still the same size, right? So yesterday, for example, Apple and Tesla completed a stock split. So Tesla did a 5-for-1 stock split. What does that mean? So, well, that means if you have, let's say, 100 shares of Tesla, you now have 500. But the price, for example, let's say was at 1,000. Now the price is at 200. It's a fifth of the price. But the company is still the same size. But when the market is in a bubble, there's feverish speculation. People see that as the company being cheaper and they buy into it. So Tesla yesterday was up 12.5% because of the stock split. Apple did a 4-for-1, a little less, I guess. If you had 100 shares, you now have 400. And it didn't go up as much, but it was up about 3.39%. And what is a reverse split? Well, that happens usually when stocks are down near the bottom. I remember after the '08 crisis, Citigroup stock was below $5. And there's a lot of pension funds, a lot of investment funds, mutual funds that will not invest in stocks that are below $5. They have some certain rules. Sometimes it's under $1. They won't buy penny stocks. So they did a reverse split, which meant the price of each share went up. I think it was a 1 for 10. So if you had 100 shares of Citigroup, you'd only have 10 now, and the price would be 10 times more to make it look more valuable. So that's what these splits do. So yeah, gold, for example, if we trade up to 2,000, which we're very near right now, we're at 1990. If you divide it by 31.1035 grams, because that's how many grams there are in an ounce, the price of gold will be $64.20. And that's why I said that. Is that going to make gold cheaper? No, it's still going to be the same price. And that's what people don't realize with these stock splits. It's just madness. And I have to give Warren Buffett credit. I know a lot of people don't respect some of his views, but his Berkshire Hathaway A stock, or A shares, BRKA, he's never done a stock split for Berkshire Hathaway. And that's why the price of Berkshire stock, the A shares, are at $327,560. He's never done a stock split because he knows that it's something stupid, right? What he did, though, years ago, was that he issued new shares, which I don't think have voting rights, the Berkshire Hathaway Class B. And I remember buying some of those a long time ago. And those are at 218. But I think they started out at something like $30 or $25, if I'm not mistaken. So that's not going to be split either. You can bet your bottom dollar because it's just a gimmick. That's what it is. Just a gimmick. So now let's look at the markets and the dollar index in particular. We're plumbing new depths today. We've broken through 92. We're at 91.81. I think, yeah, there isn't much support now until 90, and even the other level I talked about the other day, 88.25. So this is a 28-month low for the dollar index. And yeah, we need to remember that back in 1987, one of the reasons that people give for the crash in October, I think it was a 22% crash in one day, was that the dollar index or the dollar had dropped quite a bit over the summer. So we need to keep that in mind. I know that in 87, from 85, the dollar had been dropping quite a bit after the Plaza Accord and the Louvre Agreement. But be as it may, we need to keep that in mind. And I think there's a lot of froth as well in the stock market, especially in the tech sector, right? So it's 8:20 a.m. London. Let's quickly look at the markets here this morning. We've got spot gold, as I said earlier, around 1990. We're at 1989.30, up 22 bucks, so 1.1% higher. The high has been 1990.50 and the low 1963.60. I think key support now is around 1975. That was the close for the month of July. So I would keep an eye on that level, 1974.75. The low today, of course, is 1964, 63.60. Of course, I don't have to tell you that 2000 now will be the next target. There's also 2016, which has been a recent high after the big correction we had in gold from 2075 to around 1860. We have been back up above 2000. So 2016 really is the key level here. If we break through that level, we could see gold fly, in my opinion. Silver is doing very well as well. It did very well yesterday. Right now we're up 67 cents or 2.4% at 28.78. The high has been 28.84. And of course, 30, I think if we break through 30, watch out above in silver. So the Dow future right now is up 0.57%, 160 points, 28,550. Yeah, the Dow didn't have a great day yesterday. I think it was down over 200 points. S&P is up 0.2%, 35.18. The NASDAQ is up 1%, 12,225. The FTSE is up 45 points, just below 6,000. Don't forget, the FTSE got up to just under 7,000 back in 1999, 2000. So for 20 years, the FTSE has gone nowhere. If anything, it's gone down about 1,000 points. So so much for the stock market there. Currencies, as I said, the dollar is under pressure this morning. So not surprisingly, the pound's up 1/3%. The euro's up 1/3 as well. The dollar's down 0.2% versus the yen. And yeah, I've noticed as well, the dollar's really falling fast versus the yuan. We're almost down to 680 right now. We're at 682, down 0.4%. So crude oil up 1.25%, but pretty much where we were yesterday when I made my video. We're at 43.25. So let's finish off with the bond market as usual. The 10-year yield is at 0.71. So that's up about 2 basis points, but it had dropped about, I would say, 5 basis points yesterday, because I think it was around 0.75 or 0.74 when I did my video. The 2-year yield is at 0.13. So I think recently we got to 0.15. The key level to watch here is 0.1, because that's the target for the short-term Fed funds rate is 0.1. So if the 2-year gets below that, it could put pressure on the Fed to cut rates, right? So that's the key level there for the 2-year yield. So yeah, go buy some gold. It's really cheap, $64, right? But it's per gram. So don't get fooled by these stock splits. It's a really bad sign of speculative fever, stock splits. And I don't think it will end well. It could go on for longer, who knows? But there will come a point where there will be more potential sellers of Tesla, of Apple, and all these other high flyers. And then the price will just plummet. And it will be a carnage, in my opinion. And isn't it interesting that, Isaac Newton lost a lot of money in the South Sea scheme, the South Sea bubble. And it was exactly 300 years ago, back in 1720. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and these other platforms below here. I wish you all a great day. Take care. Bye.